The Reserve Bank has cut the official cash rate by 25 basis points, bringing it to 3.5%. It's the fifth reduction in a row, and all the major banks responded immediately, announcing reductions to home loan rates. And while the Reserve Bank acknowledged the uncertainty caused by President Trump's tariffs, it said that there is scope to lower the OCR further as appropriate, meaning another cut next month remains likely. Zane Small reports.
What's your favourite feature?
The indoor-outdoor.
Garima Guy purchased this Hillsborough home in Auckland for $1.72 million. She bought it back in 2022 with an interest rate of 6.19%.
So at the time, after doing our calculations, it was a bit of a stretch.
Since then, the interest rate has come down to 4.99%.
It's quite a significant saving, about almost $2,000 a month.
And there looks to be more savings to come after the Reserve Bank today cut the official cash rate, the benchmark for interest rates, by 25 basis points, bringing it to 3.5%. All five major banks responded immediately, announcing reductions to some lending rates.
We are due to expire in November this year, so really looking forward to that.
You can see here how prior to the past five cuts, the cash rate was kept at 5.5% for nearly a year. That followed a series of consecutive hikes to cool rapid price inflation in the wake of the COVID pandemic. With interest rates now trending down, mortgage advisor Izaz Hussain says his clients are refixing short term, anticipating more cuts on the horizon.
People have been staying on variable or taking shorter term, like 6 months to a year. 4.99 came along and a lot of people were like, wow, this is after a very long time from 7 to 4.99.
But even though interest rates are falling, it isn't translating into immediate relief for businesses. A survey of around 10,000 firms has found that trading activity remains relatively weak. For example, reduced orders and output is weighing on confidence in the construction industry, and that's reflected in data out today showing construction cost growth has slowed to a near record low. The Reserve Bank today acknowledged the preceding cuts to the OCR have yet to have their full effect on the economy. So with inflation close to the midpoint of the target range, significant spare capacity in the economy and a weaker activity outlook stemming from global trade policy, a further reduction in the OCR was appropriate. And there is scope to lower the OCR further.
They've indicated they're watching global developments closely. At 3.5, the OCR is not as low as it gets.
Indeed, BNZ's chief economist anticipates it could fall below 3%.
We've had a forecast on the board for a 2.75% low in the cash rate.
It's very encouraging and people are going out having a cup of coffee now because they can actually afford to pay a mortgage and live their normal life.
Extra cash that Garima is making the most of as a mum of two.
Now we've got another newborn, 10 weeks old, so that's going to be very helpful.
So she's sitting back and enjoying a long-awaited breather from high interest rates.
Well, kia ora, Zane. So the OCR is coming down, so are interest rates. So how much relief can homeowners expect?
Well, ANZ has released some figures to provide a bit of context. Obviously, interest rate relief is felt immediately by those who are on floating rates, but the vast majority of ANZ's home loan customers are on those fixed rates. And the good news for them is that by the end of this year, ANZ says around 86% of fixed rate customers on higher than 6% will roll onto lower rates. So for someone with a $500,000 loan, this could mean savings of around $130 per fortnight. And we heard my story there that it is expected the Reserve Bank will deliver another cut to the cash rate and that is scheduled for the 7th of May.
Yeah, $130 a fortnight. It is not insignificant. Okay, Zane, thanks so much.